Hey guys, I'm here with a long-lost friend of ours, well known to most of you, Brandon Moreau. How are you, sir?
Well, thanks, Matt.
Good, good. What have you been doing? Fancy seeing you here.
Fancy being at another WNA symposium.
We've been through a few, haven't we? Now I think it's
You know, it was quite interesting. This is now the third venue that I've been at. The first time I spoke at WNA was 2010 at Great Hall, Westminster. Yes. So it's become progressively more modern. Started with the ancient building, then it moved to ancient values, and now it's here we are.
I'm enjoying it actually. It's bigger. There's a lot more people. I was told like 1,100 delegates, which is certainly bigger than last year. And the other thing that's changed, I think, from last year, the mood.
Oh yeah, the mood wasn't bad last year. I had a few investors who came out from Australia and they were a little bit perplexed. I forgot to give them the story that symposium, if you talk to too many utilities, you want to leave and slit your wrists, as has been the case for many years.
Yeah.
And so they're a bit perplexed as to why people weren't a bit more excited. But this year it's been totally different. It's been buoyant, furtive energy.
So what are the big topics downstairs?
Big topics are SMR growth, including the role of hyperscalers, chemicals, synthetic fuels and so forth. That's been a real big topic. The now realistic prospect of new conventional sized reactors in the West. People are reflecting on just how well China's doing, and there was a session where a couple of the top executives here on the uranium side from Chinese utilities were on the stage sharing a few
aren't they?
lessons.
There's no kind of like east-west divide or adversarial kind of feeling downstairs. Like everyone's here. Everyone from the nuclear space is here doing their thing. Yeah,
there's been a little bit of depletion of some of the nationalities just because of visa issues, but there was a stunning presentation from Rosatom on how they're deploying their floating reactors. These are the first one was the academic Lomonosov, I think in Chukotka, quite remote Siberian Russia, but that's been on the water, plugged into the grid for years now. So that was very interesting, and that's the value of coming here, I think. You get those special insights into understanding how they're going to use that reactor, what their current plans are, who's engaged with them, what the likely fuel draw is going to be, and so forth.
Supplies. That's the other big topic I've noticed.
We certainly had a bit of a skip in our step as we arrived in London from the supply side. Obviously, the conference was predicated on supply disruption from all of the majors, and a few less than majors as well.
Yeah, and is that a good thing for investors? Bad thing? How do you view that?
Look, we need success stories. We need success stories. That is far more important than whatever the price and market impact of a few pounds here and there. I think when you look at the Kazatomprom announcement, that's healthy, and it was largely expected. I don't know anyone who credibly thought that Kazatomprom could or would go back to 100%. So it was good to get that out of the way and clear the air and reset the mind of those who wanted to believe it'd be 100%, probably utilities. But when it comes to the restarts and the juniors, investors in this sector and the broader nuclear market, we need to see success stories, and we haven't seen a lot of that.
Well, we certainly don't need anyone falling over, that's for sure. A stumble along the way, that's normal in mining, so let's just suck that up, folks. It's okay. So supplies, but also the other thing is available capital and the forms that it is taking. It seems to be evolving somewhat, and that's something I'd like to maybe talk to at the end. And so we've probably got enough subjects to get through. Let's go back to the beginning, SMRs and all the derivatives around that. What has been said downstairs? What do we need to know? And what is the impact and influence of SMRs in the next, say, 5 years?
So what's happened over the last 2 years is SMRs has gone from, maybe they are coming back, to, well, they could come back, to this year, which is, here's all the evidentiary points saying SMRs are going to be a big part of the future and could be a very substantial part. Now, I think as investors, we've known that for some time because we've been able to look from the top down at what are the energy and heat and other industrial requirements that the world's going to need. What are the other available solutions? No, 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 maybe, and then SMRs. And we're good at technology as investors generally. We can look at a technology and say, well, we can't see critical flaws in that. It's going to be tough. Someone's going to have to figure all that stuff out. But we've got a couple of decades. Surely it'll happen. Nuclear engineers don't always work quite that way. You know, they love to have absolute certainty because that is how you run a nuclear power plant.
Yeah.
No one wakes up one day and says, no one wakes up one day and says, you know, there is a chance when I pull that lever, it won't do this.
Yeah, yeah.
So from the inside of the industry, it's been tough to grapple and get to grips with SMRs. Now, what's happened and been so useful is now we've got these big players coming from outside the industry.
Yep.
So we saw on the eve of the conference that Microsoft has joined WNA.
Yep, very nice.
Now that just sort of rolls off the tongue, but
yeah,
you kind of have to reverse back and say, hang on a sec, Microsoft joining, putting their name behind the World Nuclear Association? You go back 3 years, that would have been unthinkable.
Yeah.
Like, even the suggestion of it, you would have had all of the lawyers and PR people inside Microsoft, all 1,000 of them or whatever, jumping up and down saying that is a harikiri. That shows how much public perception has moved for nuclear power, but it also shows that it is a vital part of their business going forward, including all of the hyperscalers.
Yeah.
So back to SMRs. A couple of data points for you. So first of all, the nuclear fuel report that was released this morning. In the upper scenario, that anticipates 110 gigawatts of SMRs being deployed by 2040. Now, obviously, because of the nature of it, there's a curve on that. The most interesting data point that I found was in the Energy Users Summit. This was this additional plenary that they introduced to the conference for the first time. Absolutely packed full of really good stuff, really good information, amazing access to the top decision makers at many of these, both the end users and some of the SMR developers themselves.
Yeah.
There was a study that Urenco commissioned from very good consultants who've been embedded in this industry for a long time. So that study was designed to inform Urenco's strategy on how much enrichment for various types of SMRs, including HALEU, do they need to be gearing up for by 2050. So, objective. They don't have a dog in the fight. They're not trying to convince anyone that there's going to be lots or not going to be many. They just want to get to the truth. So, the methodology was really quite interesting. They looked at it from a demand perspective and a supply perspective. The supply perspective was, well, what's the capability of the broader SMR industry and all of the supply chains and everything that goes into it to deliver into what is really an unbridled demand scenario. And then in the demand scenario, they said, okay, this is the requirements for heat and energy and industrial applications. Not everything's ideal for SMR, so here is the reduced market, which they called the technical SMR market. Then they constrained it further into what they called the addressable SMR market. So then they applied assumptions of cost and geography and a few other assumptions. The interesting step was then across different supply scenarios, they called the accessible SMR market. So what can the SMR developers collectively, with various assumptions across different supply chain advancement, access of that market? So if the SMR market gets it right, by 2050, the number that they came up with was 700 gigawatts. Okay. So if we do anything like what SpaceX has done or anything like what normal tech companies do when they scale, as an industry, we'll go from 7 gigawatts, which is everything in operation and construction and contemplation around the world, to 700 gigawatts by 2050. Now that's not really inconsistent with the WNA upper scenario, which was 110 by 2040. Because of the hockey stick nature of this type of deployment, that's about where it would need to be to get to 710 years later because of the advantage that SMRs have got to scale. Now, they're big numbers. Now, even in the other constrained scenarios, we're still talking multiple hundreds of gigawatts of SMR by 2050. That sounds like a long way away for investors. I'm looking at you.
I am wincing somewhat.
But in uranium mining terms, we need to be exploring now and making discoveries now for the fuel that's going to go into those SMRs in 2050. And there's not the capital, there's not the pricing, there's not the incentive for that.
It's a funny one. I imagine this is a bigger energy conversation, full stop, rather than just pure play nuclear and therefore uranium conversation. I think the immediate needs are through to 2035, say. Then what's happening in the next 10 years? How does that work? And then 2050 doesn't seem so far away from that. It's another 15 years away. But one would think that there may be other technologies that may be able to compete at that point. Because I think, as a uranium investor, I want to make money, and I want it to be true, and I want it to be true now, because I'll be dead in 2050 with any luck. They won't be keeping me alive.
No, red wine's good for your health.
Is it?
I've read it.
I know, one a day. Bottle.
Yeah,
bottle a day keeps the doctor away. It's true.
Right,
it's true.
Just be careful of those apples, though. They're bad for your teeth.
So I think there's more immediate pressing concerns for me as an investor. Okay, and I want to kind of bring it back to that, because I love the fact that this report seems to be a little bit more up to date than previous years, where perhaps the data was a little bit more long dated. It felt like.
Yes and no.
Okay, parts are, parts aren't.
Okay, so let's talk about the fuel report.
Okay.
My biggest takeaway is the shift, and it's a fairly significant shift in demand in the lower case scenario.
Right. Okay.
Really moved. And there's a lot of factors with that. Like, we're no longer this world saying, do we really need those reactors? Do we really need to extend those reactors? You know, maybe we should just turn off perfectly good reactors like they do in Germany.
We've seen how well that's gone. Yeah.
But that's exactly right. And even the Iberian blackout has given the Spanish policymakers something that they really need to be thinking about with their 7 reactors that are currently scheduled for being turned off. I think from an investor's point of view, if we reverse to the time that your audience has been following the uranium thesis, it's always been a supply story. You know, this demand potential, it's been icing on the cake. It's been the difference between a highly buoyant uranium price and a crazy uranium price. That supply thesis was always something like, we don't need the growth, we just need the nuclear industry to keep operating like it is at the moment, because there isn't enough uranium. And there hasn't been enough forward investment into mining and exploration to ensure that there continues to be enough uranium, and that's going to produce the environment that investors love, supply-demand deficit.
Yep.
The difference now is that even the industry, when you look at the lowest possible scenario, shows that we're just not going to have the uranium. So we can layer onto that a whole range of positive scenarios as an investment. This has become a highly asymmetry-based bet. This is the asymmetry has come up time and time again with the hedge fund managers and the other investors that I've been talking to this week.
But it's a kind of catch-22 for me. Like, I like the scarcity, because scarcity drives price, and it's good in any commodity-based sector. It's good generally. Scarcity is a great driver of volatility and that asymmetric type return that investors want. But at the same time, it's not necessarily good if we're putting that message out into market, because the big money's going, well, where's this thing go? If these guys can't get their act together, I'm off somewhere else. Right, I've got to believe that another energy solution is out there. So I want everyone in the energy sector, the uranium sector, to succeed. Right, there's no one I don't want to succeed in this space. There's a little bit of that in the back of my mind. Short term, and I've got to keep bringing it back to this, because the guys listening and watching and reading this are saying, well, what's that mean for me now? What does all of this mean in terms of SMR demand driver in the short term mean for those who can produce? Will producers get rewarded better than people who don't produce? Or is it a case of momentum, sentiment, and other factors will just continue to kind of drive everyone up? All boats float on a high tide. The old cliche. Come on.
Okay. Let me show you where all of this longer dated optimism and planning meets the rubber hits the road.
Yeah, that one.
For people in the next couple of months.
Great.
Okay. These utilities and other industry players are now leaving this conference and going back to their offices and recalibrating what they know based on all of this new data.
And it's buying season.
It's about to start being buying season.
Yeah.
They have to make decisions now that incentivise fuel production over the next 15 years. The reason why I'm being very blunt about this supply-demand deficit and not tiptoeing around like we have at WNA for a number of years is that is an absolute undeniable conclusion that's coming out of this conference. And when they watch this on YouTube, I stand behind those words. There is still the opportunity to ensure that there is the investment into obviously near-term developers like Bannerman, but more importantly, the exploration that goes forward. But those market conditions need to be present very soon. That's great for us because we anticipate that these conditions will provoke a contracting cycle. We haven't yet seen replacement level contracting, but we think we will in the coming weeks and months. And these data points, in my opinion, will trigger certain utilities, if not most of them, to realise that the best way that they can mitigate these highly disruptive shortage scenarios into the 2030s is to start restocking and getting back to more comfortable.
How do you know? Like we've said that every year since 2019, right? So how do you know that? Bannerman Energy today has announced, well, the middle of the morning today, has announced that you've got two offtakes, £1 million. That's a lot of money. You're not going to tell me the terms because it's between private contract terms, etc. But
correct.
Can I ask the question? Because you are in no rush. You're not being rushed into this. You've got money in the bank. You don't need to do this, and you've been kind of moving things along the execution timeline, and you will need to raise some money to build this thing out at some point down the line, right? So, and you know when that is. Did you get terms that allow you to make money and say, well, actually, do you know what? I think the utilities understand what's happening in the marketplace. They want a surety over supply, and they're willing to give us the types of terms that we think are reasonable now, and the flexibility in those terms to move with the market once it starts moving. Because otherwise, you're going to be accused by your investors and others and say, look, you did it too early, you did it too cheap, and why would you be so silly? I would never do that. So how comfortable are you feeling about having to doing these two offtakes now versus waiting?
Entirely comfortable. Okay. Basic points. First of all, at current market prices, we make money. Okay. We make good return. This is 6% of our production in the first 5 years. 6%. So if this looks really cheap in hindsight, which we anticipate it will, it's 6% of our production that's been locked at this level. More importantly, what it enables us to do is participate more fully in this next contracting phase. Okay. You think about it from the mind of a utility. They want to know that the parties that they are offlaying their risk with are credible, are trustworthy, have had tier one consultants crawling all over them, and have the internal capability to go from go to woe in a contracting process. We've had US counsel engage for over a year in this. It's a complicated business, right? Yeah. You know Olga yourself and how sophisticated she is. She's been with us for more than 2 years. We've had chief legal counsel in Australia for more than 2 years. Yeah. That's what you need to be able to do to get to a long-term contract. And if you're a utility, do you want to be negotiating with someone who you don't know if you're going to be holding their hand for the next 6 months trying to figure all this stuff out? So we're making money on 6% of our production. We expect to do much better on margin on the balance, and we've got various ways of optimising the portfolio. This gets us into the game.
Well, to that point, like I appreciate we've talked about this before, but just anyone new looking into this thing, why not just go full exposure, full spot? You're so sure the price is going to be so much higher. Why does a company not do that? Why commit now?
Because we've got a range of financing alternatives that we're working on at the moment. One of those involves debt. You go to a debt provider and say, hey, we've done a full market exposure contract, and they go, so? In this case, we go, we've locked it in, and We've got terms where we make a good return, where we'll be paying you back comfortably and paying something to shareholders. They say that's a great start, let's move on.
So it's to get things going.
Yes.
Right, okay. Understood. Anyway, we should come out of Bannerman Energy, because I thought that was a great announcement, and like you say, you could bide your time on that one. I wondered why now versus waiting to see what Spot does. Yeah, okay, I get it. Back to the show. So SMRs, I think we can say we've talked about that a little bit. There's always more we can say.
Yeah.
The next thing on the list was around
credible talk about conventional reactors being built in the West.
Right. Okay. So what have we got?
So there's still a substantial need to build more AP1000s in the West, in particular, and then the French, of course, are building EPRs and so forth. One of the most interesting presentations was from a company called Fermi.
Yeah.
And they're building both SMRs and they will build AP1000s within a US military site, utilising the new executive orders which grant effectively jurisdictional regulatory control to the Department of Defence. And they're building them. They're just going to build them. They don't have to get caught up with all of the NRC, Nuclear Regulatory Commission issues and dealing with people, and it's an existing military site, so it's very well catered for advancing things in a quick way.
Right. Okay.
So that's one example, and there's a recognition that we need to build AP1000s in series. We need to be building multiple of those reactors to get them back on track and get them actually being built efficiently and effectively and get the supply chains going. Mm-hmm. We don't need it for the thesis, but it's an important part of the uranium thesis, and many of those utilities are considering plans to build themselves, and that again will encourage them to get back to replacement level contracting and then move into restocking as a protection for a 2030s supply deficit.
Okay. Yeah, I think it's going to be interesting again, because I talked about, and one of the things I do want to talk about is the type of money that's coming into the space and where it's coming from and the quantums, because people get super excited about AI data center requirements from the AWS guys and the other kind of tech companies leaning into the space, because they have the money to kind of buy up and build everything should they so choose. But I can't see them wanting to get involved in the nitty gritty. They just need certainty of the supply, right? At the moment.
That's their preference. It's already evolved though.
But what does it mean? Because people are assuming that Amazon will just drop a few billion into space casually and so forth. But how will those entrants being involved actually help us? How will it help companies like yours?
So for a start, they're going to squeeze the utilities. Not through any intent, not because of anything they're doing or what the utilities are doing, but they have got a preferential urgency for power and therefore fuel that will lead.
But what's the knock-on effect? Like, I get it. It's kind of like doing getting a leased line. That's my line. No one can touch it. They've got their own power supply. That's what I need. I want everything that 3 Mile Island produces. That's mine. What's the sort of knock-on or ripple effect for consumers? Will it mean that utilities increase their investment exposure to nuclear for their kind of retail offering? For punters like you and me, will demand increase therefore from companies like you, and me as an investor, how do I benefit? What's that ripple out effect?
They'll need to do both. They'll need to increase the amount of electricity they put into the consumer grid. Yeah. Because you can't just, they can't allow the hyperscalers to just go and take all of the power that everyone else has paid for, as consumers over time. Yeah. And we'll see a huge deployment behind the grid. Okay. So this Fermi proposal, they're not plugging it into anything except the sited data centres and industrial clusters that will be built right with those reactors on this POD.
I just wonder if that kind of scaling up of knowledge and expertise within the utilities as such, will there be a ripple out knock-on effect for the rest of us? They say, well, actually, we're doing it here. Maybe we can share the knowledge, increase the spend. And maybe move away from renewables or whatever it is that they've been wasting their money on.
Utilities are there to make money, right? So they can see an advantage, they can see an opportunity, and when you've got such strong customers who, in so many of the examples, are literally leading the utilities by the nose with the money, Crane Clean Energy Centre being a good example, and some of the other examples. They've basically said to the utilities, well, what's it going to take? What's it going to take? Okay, you need to take or pay? Fine, how much? Okay, great. Here's a big wad of cash. You guys go and do it. Utilities, like the rest of us, they see an opportunity and they do have capability, and I think what they're starting to realise, though, is they need to have a more aggressive mindset than a typical infrastructure investor to take full advantage.
Just keep the hedge funds guys away. That's all I'm asking.
So that's another point.
Yeah.
So we're seeing distinct reasons to think that this shorting across the sector is now not only abating, but there's every expectation it's going to pivot, and probably the same players who've made a poultice shorting stocks that haven't performed in the way that they should have, they'll probably redirect those back into equities, and we understand how that works. They get set in equities, and then we'd expect to see an investment into spot coming in from those players.
Okay. I know this is all very superficial, but you've got to run away, and so have I in a second. So we're bouncing around a few topics here, and I did want to talk to you about supply proper. As I said, there's been a few stumbles along the way this year. It's not a good look, but it's not terminal. No one's fallen over, flat on their face. It's just mining. It's nothing really to do with uranium. It's just
Tough
mining,
business.
right? It's tough business. What does that do in terms of opportunities in the space? Because those who can demonstrate that they can get into production, that they can build companies, they can maintain that output. It feels like it'll be like picking candy in a candy store, because there's a lot of companies struggling. They've got good assets, but they've been cash constrained. They've got good assets, and management don't really know what they're doing, or no intention of actually moving things forward. Do you think there's going to be a lot more M&A in the space? Do you feel it needs it?
So we see a really distinct opportunity for Bannerman. So our Tango project in Namibia, of course, is very advanced. We've got a great balance sheet, 140 million Aussie in cash to keep it moving forward. It's a simple project. It's open cut at surface, conventional mining, small fleet size that's very accustomed in Southern Africa, heap leaching that's been really well demonstrated, close to infrastructure, and we've had DFS through front-end engineering and design, and now into detailed design.
Yeah.
The point is, we're going to be able to bring a Tango into production with a vastly, vastly different technical risk profile to everything else that's been challenged out there. We will quite literally be the simplest uranium operation in the whole world once we're in production. Our challenge, of course, is to communicate that to investors so they understand we don't have all of the challenges of ISR or underground or jurisdictional or environmental and so on. Fundamentally, we need to deliver. To your point, though, we've got this huge opportunity over the next 3 years to deliver on that, so that we're not talking about confidence, we're showing that we've delivered, that we've ramped it up like we thought, that we've come into production like we thought. And then I would expect that puts us in a really strong position corporately, really strong position to initiate M&A, to initiate the development of new discoveries that might be made in the way, along the way. Now, we're very focused for now. It's not something that's distracting us. I'm not interested in M&A right now, but it's very easy from a strategy point of view to fast forward just a few short years and see that we will be in such a strong position. £3.5 million, good margins into a really strong uranium sector with the capacity in year 5 to double that to £6.7 million at our own mine site, hundreds of millions of pounds of resource. So this is going to be a multi-decade mine. So we're not going to be wondering, if we need to do a whole bunch of drilling to keep the show on the road. It's rarefied air, Matt. Like, there's a handful of companies around the world that have got projects that are permitted and ready for development. And we're at the front of that queue in a dream jurisdiction like Namibia. So to answer your question, what do all of these stumbles do? What does a reduction in Kazakh production and a reduction in the Cameco production do? It just makes a Tango that little bit more sought after, that bit rarer, and that bit significantly more value.
And the North American market obviously seems very, make America great again. It's, and made in America is a big cry. But do you think that the reality of the US production capabilities will mean that they are going to have to extend their hand and reach out to other parts of the world, other friendly jurisdictions and companies? And how does that help you in terms of your negotiation with utilities. Because there's this kind of competitive tension thing going. China's just buying up everything and anything that anyone will give them, quite frankly, when it comes to uranium, because they're building out at a tremendous rate. The report came out recently, just fantastic. But the miners aren't doing a job at the moment. They're just not doing a job at the moment. So we've talked in the past about bifurcation of the market in terms of pricing. We've talked about what the US government is doing in terms of actually doshing out the cash. Critical minerals, obviously uranium is high up on that list. How does that, do you think, affect your ability to build out the company, finance the company, the cost of that capital, all of that kind of good stuff that you want when you see a competitive environment like this?
Yeah, so Matt, you're touching on a really key attribute of being a Namibian producer, which is Namibia's non-aligned geopolitically. We wouldn't sell to Russia, but Namibian production can be sold to Russia. It can be sold into China. It can be sold into the US. The US production won't meet domestic requirements, particularly with this enormous growth profile. They'll be looking to Canada first of all and Australia secondly. Canada's growing as well. Canada's going to build the first SMR in the Western world. They're going to have a big growth profile. Australia, of course, won't, but Australia's not. Yeah, well, there aren't that many people in Canada, but they do have some industry. Yeah. But the point is that Canadian production and the degree to which US can re-establish itself, that's not going to be enough. So we can service those markets, as we've seen from the interest that we've shown with the announcement today. Most importantly, though, China can't access the Canadian market. Yeah. Canadian companies aren't allowed to sell new production into China. Yeah. And so the Chinese, hence why they're looking elsewhere. The ability for us to sell to China, to North Korea, to UAE, to Europe, to America, to all of the emerging nuclear entrants that are coming. That gives us both a broader market, a market that we can tap wherever the shortages are, but it also gives us tremendous geopolitical appeal.
Because I like this idea. Other sectors do it. Mining, you have preferred supplier lists, right? Yeah. And Canada feels like they will be preferred suppliers if they can supply. And there's a time frame to that. And for companies that can produce now, preferred suppliers usually means premiums, and it comes back to that bifurcated market, because they need certainty, and I'm not quite sure where it's coming from. I come back to that one thing, they're going to need to work out where it's coming from, because for all the talk of these small US producers, like even the biggest producer in the US doesn't produce £1 million a year.
Yeah, so it's going to be a long road back for the US. And
but again, back to investors, what does that do for companies like yours if you can prove you get stuff out of the ground and available to the marketplace?
Gives us a pricing premium that we've got the skills to build into our portfolio. It gives us a geopolitical premium that ultimately will serve our cost of capital and give us options in an M&A sense. And it de-risks the project, fundamentally de-risks the project. So we're presenting both a superior return and a superior risk profile for investors going forward. A lot to like, Matt.
A lot to like, and we should. I wish we had more time because we should have seen each other a lot earlier. Talk about all the other kind of geopolitical stuff which we've enjoyed in the past talking about, and seeing how that's affecting everyone's behaviour, thinking, planning, risk management, capital access, and the rest. But maybe for another day. See you soon. Safe journey back.
Thank you very much.
And Gavin's invited me to go to site in February, which I will take him up on, and we'd love to see if you're there. If not, we'll work out somewhere else.
Fabulous. I'll join you for that.